Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1083A, and today's date is September 23rd, 2016, and the title of the episode is UN Annual Report States We Are on the Verge of the Third Leg of a Global Financial Crisis. Let's get into the economic collapse financial news. Now, looking at the economy, we can see that up to this point, everything that we looked at, going back many years, we have only seen the economy decline. We haven't seen more stores open up. We haven't seen more people getting hired. We actually see the opposite occurring. We see a lot of manipulation of the statistical numbers. But when we look at the economic indicators and we look at the economics of real people, we see that this entire system is rapidly deteriorating very, very quickly. And the government right now, they're losing control of the narrative because they're continually telling us that it's fine, the stock market's going up, and everything looks good. But when we look at everything like retail, GDP, unemployment, manufacturing, everything that tells the story of how the U.S. is really doing, well, all that is declining rapidly. And a lot of the data is a lot worse than 2008 during the Great Recession. And we have periods of time where we're in this recessionary territory. And we can see the Eurozone, well, they're worse off than the United States. We see the Eurozone business activity, well, it has expanded at its weakest rate for this month since the start of 2015. Markets Composite Survey showed a big split between manufacturers and struggling service sectors. The Eurozone Flash Composite Purchasing Manager Index, well, this is seen as a good overall growth indicator. Well, it fell to 52.6 from 52.9 in August. And we can see right now that this system is rapidly deteriorating. I know the U.S. government, the corporate media, they're going to continually tell you that everything is fine. They'll continually lie until the very, very end, when people are rioting and protesting in front of the Capitol. They'll still tell you it's okay, that everyone has a job. But what we see is that there's an increase of people who are living in homeless shelters in New York. And we mentioned this briefly yesterday in the report. But what's very interesting about this is that when you look at this data, and they say 60% increase, from July 2008 to July of 2011, homeless shelter remained fairly consistent around 8,000. And then after July 2011 to this point, over the following, 5 years or so, there's been an increase of families living in homeless shelters to nearly 13,000, 60% increase. Is this really what a recovery looks like? When all of a sudden, coming out of the Great Recession, we see an increase this large of people who can't stay in their homes, and we know that people are going for that emergency shelter grant. So this recovery makes no sense. And we see the housing market, it's continually declining. We know Larry Young, he can't figure it out. Can't figure out why, since everyone's employed, why aren't they buying houses? And why are applications for mortgages right now, have they tumbled to 7.3% last week? With interest rates at such a low point here. And banks allowing you to purchase a home with really no down deposit. It makes no sense. We see markets manufacturing PMI, print for September, missed expectations of 52, dropping to a 3-month low at 51.4. And we see that new orders, inventories, they all declined. We're seeing the world trade in merchandise. This is the global goods producing economy. Well, this is declining. And this is coming out of the CPB Netherlands Bureau of Economic Policy Analysis. This is a division of the Ministry of Economic Affairs. They just released their preliminary data of its Merchandise World Trade Monitor. The index fell by 1.1% from June to 113.4. This is the lowest since May of 2015. And we can see the world trade is on a slow, volatile grind lower. And this is what we've seen before as we moved into the Great Recession. Now, for many consumers, they don't have a whole lot of money left to buy things. You know, the gadgets, the foods, the apparel, all those other things. And this is showing up now in certain economic indicators, showing us that we are in a downward trend to a depression. I believe we're already in a recession. And we can see already the Atlanta Fed already slashed GDP. You know, they say we're going to get 3.6 or 3.8, and they had to lower it to 2.9, and it's going to go even lower than that. New York Fed did the same exact thing. They said, oh, this fourth quarter, third quarter, it's going to be incredible. This is what we're predicting. We're predicting, 3.2%. It's going to be fantastic. Well, guess what? They just slashed their prediction. And now they expect 2.3% annualized growth. So when we look at this, we can see that all of it is a lie to make you believe. What do we have coming up? The elections. And they're trying to make you believe that still everything is fine. Now, people will look at this and they say, well, it's only 2.3%, 2.9%. But you know that this is going to be much, much lower. Think about what they said. The largest contributors to the GDP are manufacturing, retail sales, housing and construction. And the New York Fed is reporting that this is the problem. Well, isn't that pretty much everything in the GDP? Because we know 70% is spending. Well, of course, we have Obamacare, which allows the government to completely manipulate the GDP, because as premiums go up, they can say, ooh, look, spending's going up. But is really spending going up? Or are people being forced to pay more for something that they don't even get? There's no benefit to it. So we can see right now that this whole thing, it is rapidly falling apart. Now, the Fed's myth is completely unraveling before our eyes. And of course, the latest myth is being promoted everywhere, that median income growth exploded higher last year. And we can see right now that I guess the people that are reporting on this really didn't read or understand the information, and they just went with it and manipulated a massaged number and said, listen, yes, we do have this. Well, John Williams, he read the report, and he found something very interesting, that the census has adjusted its methodology to include what interest income would be if rates were not at zero. So the census was able to claim interest income increased by 111% during a period in which the U.S. interest rate was only 0.25%. Now, who controls the census? That's right, the White House. So this must be a complete coincidence that during an election year, suddenly the data got so much better based on ridiculous assumptions. So we're led to believe that jobs are so strong that the U.S. is completely fully employed. Well, setting aside the fact that 94 million people are out of the workforce, 46 million people are on food stamps. And we can see when someone gets a job, that person begins to pay income tax, right? You pay income tax, and the government uses it to pay down the debt. And of course, they're not bringing in enough to pay down the debt, so they have to borrow more money. So if more and more people are getting employed with this fantastic job economy, this recovered job type of economy, and they're telling us that wages are increasing and everything is better, why then has income taxes that are withheld, why have they fallen for the last 2 years? So what they're trying to show us is that employment is getting better. We're almost at full employment, but tax revenue for the last 2 years is going in the opposite direction. It makes no sense. And if we look at the state personal income tax, and this is coming out of the Rockefeller Institute of Government, they just released a report saying that the state personal income tax revenues, well, guess what? They're declining. They only grew by 1.8% year over year in the first quarter of 2016. The second quarter shows a decline of 3.3%. So this is showing us that if we are getting more jobs and we're almost at full employment, tax revenue should be moving up in the same direction. Now, the only reason this would be going in the opposite direction is that people left high-paying jobs and they got part-time jobs. People got laid off from these incredible jobs and they can't find jobs. So once again, we see a lie, an illusion. It doesn't make sense. And we can see the UN Conference on Trade and Development Annual Report, which was released September 22nd, 2016. They're suggesting that the third leg of the world's depression is yet to come. And we can see alarm bells have been ringing over the explosion of corporate debt levels in all the different economies. They now exceed 25 trillion. And the UN economists think that this is imminent. This next financial crisis is going to be epic. We're going to see corporate defaults. We're going to see a derivative explosion. We're going to see a lot of people out of work. We're going to see the housing market completely take a dive, which is going to throw everything over the side of the ship, and it's going to be a lot worse because real estate is attached to pretty much everything. Once the derivatives go, that's going to be a chain reaction throughout the banking system. And we can see right now that corporations, they're not bringing in the revenue. Layoffs are going to be absolutely horrific. And they already know this. They're already discussing this. They've been discussing this for quite a while. And when we look at it, we can see that it's almost time. The central bank realizes they have a certain period of time because they don't want this system to come down without having some type of story of why it came down. They don't want everyone to point the finger at them because you have to remember, they've been telling us that everything's been fine. The government has been telling everyone it's been fine. Europe has been telling the people, oh, you don't have the job, don't worry, but everything is fine. And when it comes crashing down, how are they going to explain this unless they have blame and they blame it on someone else? And that's what they're prepared to do. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.